Hello everyone, in today's video we're talking about how to approach purchase price allocation, an overview. So, let's get started. What is purchase price allocation? Purchase price allocation, or PPA, is a financial accounting process in mergers and acquisitions. It involves distributing the total purchase price among the acquired assets and liabilities. Tangible versus intangible assets. Tangible assets have a physical existence, while intangible assets, like brand value or customer relationships, are more abstract. Each category has its unique valuation challenges and methodologies. Valuation methods. Various valuation methods are employed in PPA, such as the cost, market, and income approaches. The market approach compares prices in similar markets, and the income approach assesses future cash flows. Importance of accuracy. Accurate allocation impacts financial statements, tax liabilities, and overall financial health. Companies must adhere to accounting standards and regulations to ensure transparency and compliance. Post-acquisition implications. It has post-acquisition implications affecting depreciation, amortization, and future financial performance. Staying abreast of these consequences is essential for long-term financial planning. Purchase price allocation is a meticulous process vital for financial transparency in mergers and acquisitions. Each step contributes to accurate financial reporting, from identifying fair values to employing valuation methods. Thank you for watching. Don't forget to like, comment, and subscribe for more videos and information.